Hello friends, this is Raj Sastri from Raj Option Trading. Today is May 5th, 2021. I want to talk about top performing solar stocks. So here I got few images. One is Daqo Energy based in China, and we got Sunrun and Enphase Energy. So these are top companies, and I got few more I will talk about. And with that, global solar energy market is going to grow at a compound annual growth of 20.5% from 2019 to 2026. That's an impressive growth rate, and these companies are poised to take a good chunk of that growth. So with that, let's look at few stocks and see which companies we can buy and take it from there. So here we got a list of 20 companies, and these companies are organized by 1 year performance. As you can see here, the company at the top, Sunworks, has an impressive performance of 1941% in 1 year. So I also have, the price, market cap, the sales in million, 1 year sales change, quarter over quarter sales change, gross margin, and so on and so forth. I pay very close attention to the sales growth and gross margin. And I also look at the float ratio or short ratio and price to sales ratio also. So with that, let's jump in here. First one is Sunworks. I think it's a great stock. It's a $9 stock, not very expensive at all. And it's got good sales here, $38 million sales. One thing is to see here is right now the sales growth is negative, minus 39.70 for 1 year, minus 40.30 for quarter over quarter. Gross margin is okay, 13%, not great, but it's okay. And short ratio is a little high. Um, and as you can see here, one thing to notice, they've done nicely for 1 year, and they're off 66% from 52-week high. And as you see here, 6 months is a little bit less. 3 months they're into negative already. 1 month they're into negative. 2 week again negative. 1 week negative. 1 day negative. So I feel like this company probably is because it's gone down so dramatically, and there is a chance this can catch some fire. So I'm looking at this cautiously and buying a little bit during the dip like today's, and holding it for a while. Next is SolarWindow. SolarWindow, as you can see here, no sales. It's a $0 sales. Market cap is also low, 610 million. A little higher than Sunworks, but lower. And stock price is also low, $11.90. And there is no sales. There is no sales growth. The institutions are not buying into this stock yet, but impressive performance, as you can see here. And they've done pretty okay. They're up for six months. They're down for 3 months, 1 month. They're up for 2 weeks, down for 1 week, and up for 1 day. So I would think a stock like this, by looking at this chart, by looking at their 1 year, 6 month, and this performance here, you can clearly see they are trying to make a comeback here in a 2 week, 2 week range, and 1 week and 1 day range. They're trying to make a comeback. So I think that's a good one. As companies try to make a comeback, stock can go higher. So this is one thing I would be buying, as it, at this price, and also adding to my position if the stock falls a little lower, because I see a trend here. This can continue to turn around. Then we got ReneSola, SOL, again low dollar stock. As you can see here, this has got gross margin is okay. It's got some sales, 74 million, and it's got a little higher short ratio, as you can see here. But it's off 76% from 52-week high. Nice 1 year growth, 744. As you scan through this, it's still going through down period here. I think it's good to buy some into this weakness and hold it for a long time. I think it's not yet in the recovery mode yet, but I think soon this can go into recovery mode. Next is one of my favorites, Daqo Energy. I like this stock. It does very well. $77 stock. Nice market cap, 6 billion, and good sales, $76 million. And I like this sales growth here. 1 year, 54%, quarter over quarter, 108%, nice gross margin, nice institutional ownership. And short ratio is high. That's one of the reasons it's catching some fire at this point and going up. As you can see here, stock is off 40% from 52-week high, but done very nicely for 1 year, 6 month, and as you can see here, 3 month is negative, but 1 month, 2 week is positive. So now it's recovering. I think this one is also good to buy. So because it's in the recovery mode at this point, and this can go higher. Next is SunPower. SunPower, as you can see here, $23 stock. They got nice sales, $1.1 billion. Sales growth itself is negative at this point. That's one of the reasons I'm not recommending it, but it's a good one if you want to be a contrarian at this point because it's beaten down so much. And you can also see here, this company is also showing some signs of turnaround. I think this one is also a good one to buy into this weakness, especially they got a lot of sales, $1.1 billion sales. Right now they're into negative, sales growth, but it can turn around. So with that, I think you can cautiously buy SunPower also because it's trying to turn around at this point. Next is Sunrun, $41 stock, as you can see here. Very good market cap here, $9.3 billion. Good sales, and sales growth is also okay. And as you can see here, high short ratio. This company can go higher on any good news and squeeze all the shorts. And off 58.50 from 52-week high. Nice 1 year sales, as you can see here. And this stock right now it's still in the downtrend, as you can see here, but I think it's good to buy into this weakness. Slowly add to your positions. Next is Enphase, and this company is another great company. It's got $18 billion market cap, a little higher price, but it's not too high, and good sales here, $871 million. Nice sales growth, great here, and institutions are buying into this, just like Sunrun. This also has got great institutional ownership, and as you can see here, stock is off 44% from 52-week high, and they're also trying to show, I think they're not yet in the mode of recovery, mainly because stock has announced the earnings, I think last week, and they did well from a revenue and EPS perspective, but the guidance was a little soft. That's why company share fell off. So I think this one also, because its earnings is all over, that risk is behind. It's good to buy some Enphase energy. If you don't want to buy stock outright, you could also buy some call option or a call spread and take it from there. Next is SUNW Energy, $31 stock. And I think they got good sales, $172 million. Nice sales growth. I like the sales growth. And as you can see here, short ratio is not too high. It's okay. And company has done 166% for 1 year, and they're off 46% from 52-week high. As you scan through this, they have done positive 8% for 6 months, negative 33% for 3 months. As you scan all the way through, they're still in the negative mode. I think this one also is good to buy on this weakness slowly and add to your positions. Next is Canadian Solar, $39 stock. Right now, as you can see, your sales on a 1 year basis is negative, but quarter over quarter it's positive. I think it's a good one to buy also, and it's got good gross margin, nice institutional ownership, higher short ratio here. This can also cause some short squeeze if stocks tries to go up on any good news. As you can see here, because there is a high short ratio, stock is down 3 month, 1 month, all the way they're down even now, but this can change in a heartbeat. Next is JinkoSolar. JinkoSolar, same story as you can see here. Sales growth is positive for 1 year, negative for quarter over quarter, high short ratio as you can see here. And this also, is done nicely for 1 year, off 62% for from 52-week high. And as you look through this, this is also in a downtrend at this point. I think this one is also a good one to buy. Any good news, these shorts can get squeezed really hard. Next is SolarEdge. SolarEdge is also one of my favorite. As you can see here, right now, their 1 year sales growth and quarter over quarter both are negative. Nice gross margin, nice institutional ownership. That tells you all these big funds are behind this company and supporting this company. And as you can see, this same story here also. They're 41% off from 52-week high. Nice 1 year growth, but as you can see here, down for 3 month, 1 month, 2 week, 1 week. They are now trying to, today they went up a little bit. I think this could be some sign. It's too early to call, but I would buy at this time and try to accumulate a little bit and take it from there. Next we got some of these little illiquid type stocks, STECF Scatec, done nicely for 1 year as you can see here. This one is also, it doesn't trade too well. I think it's in one of those pink or some of the exchange which does not require too much reporting requirements. As you can see here, they're not moving that well. The stock is a little bit illiquid. I would not buy into this, but if you want to buy and forget, you could. But stock doesn't move too much on a day-to-day basis. Next, we got Hannon, Armstrong, HASI. I think this also, I did not highlight this because sales growth is negative, but has done nicely for 1 year. And now, as you can see here, still in the negative mode. They're not in the recovery mode yet. I think this is also okay to buy a little bit into this weakness. But as you can see, growth is not as good as other companies that we saw in the past. Next is First Solar. This is also one of my favorites. This stock, as you know, like any other solar stock, it's got its ups and downs and peaks and valleys. It's always good to buy First Solar into these big dips. As you can see right now, we have a big dip, and now they're trying to recover slowly, and it's a good time to buy First Solar also. Then you got AY, Atlantica, and this one also, as you can see here, positive sales growth, which is good, and they're also negative when it comes to 3 month, 1 month, all the way to today. This is also a good one to buy into the weakness and slowly accumulate. Next we got NextEra Energy, one of my favorite again, and stock has, right now it's a negative sales growth as you can see here, good gross margin, good institution support. As you can see, a stock has fallen off the cliff. One of the great stock, good dividend paying stock also. I think this is a good one to buy on this weakness and add to your positions. Next, we got a couple more here. I will not cover them in too detail, but these are also great stocks. I think a couple of them are in the negative territory right now. For 1 year, these stocks have turned negative, and they have turned negative all the way to even one day. So stocks like Maxeon, ASTI, even ARRY and Xinyi, I think it's good to buy on the weakness. This will now normally bounce off again. Right now, all the solar stocks, as you can see here, for most part, they're down for say 3 month, 1 month, 2 week. They're trying to recover a little bit, maybe in 2 week or 1 week. But I think generally the trend right now, solar stock is in rotation mode. Folks are rotating out because they've done so nicely for 1 year. People are taking some money off the table to buy other beaten down stocks. So with that, I think let's go into a little more detail on few of these stocks and see how to play them. First one is Daqo Energy. It's one of my favorites. It manufactures and sells polysilicon photovoltaic products in People's Republic of China. I think these guys are great at what they do, and as you can see here, they outpace the stock market gains. JP Morgan thinks it could climb even over 60%. And I think this stock gains, stock jumps. I think overall, even our President Joe Biden, he commits to slashing U.S. emissions. These are all some, tailwinds, impacting these type of companies. And if you look at earnings per share, I think this company is earning money. So they have done 36 cents, which is great. And they also have a nice sales clip. I love this sales growth. They have done nicely. And shares outstanding is pretty okay, not too bad. I don't want to see huge outstanding increase, but it's pretty steady here, not bad at all. And from a fundamental perspective, as you can see here, company has done nicely, $77 stock, nice sales growth. I love this, nice gross margin, and short ratio is high, which could be good. Any good news, the stock can go up, and it's done nicely. As you can see here, one day it's done nicely, but down for 1 week, but up for 2 week. So I think this company is showing some signs of turning around. It can recover some of these 40% off. I think it can recover some grounds on this. And if you look at margin, they have a nice margin. They got 19.10% net margin. That's always good. And they got good PE ratio. It's not too expensive, manageable, nice earnings per share. That's great. And as you look at this year, they got 73 million shares available. That's a little, I think, not bad at all. They got cash, but all these solar stocks, as you can see here, they got a little bit higher debt. I think, probably it's the nature of the business. It's a little bit debt-heavy type business. And stock is liquid, as you can see here. They got nice volume here on a 3-month average and even daily volume. And this stock is performance is not a fluke. They got nice 2-year performance also. 1 year we looked at here 700%, even more on a 2-year basis 916%. 5-year is even greater, 1400%. I think it's great, from a performance perspective. It's not a one-hit wonder. And they got nice ROE and ROA. That shows management really knows how to use their financial position. I like to see double digit on ROE and ROA for most part. And the reporting on 5/19, so it's maybe a week or two down the line. Be a little bit careful around the earnings date as usual. It's okay to make some small bets, but hopefully these shorts will get squeezed and stock can go higher. So with that, let's look at the thinkorswim chart for Daqo Energy. As you can see, nice stock chart. They've done nicely all along here. March time frame. I think from March they kind of went sideways a little bit. There was a earnings, stock went up. They also had a stock split, 5-for-1 stock split here. Stock went up. One more earning, stock kind of traded sideways. There's a good chance because they are coming, cool or a little bit lower into this earnings season, they can go up on a good news. And from a RSI perspective, it's midway 49%, which is not bad. It's not overbought at this point. It's okay to buy. Implied vol is low. IV percentile is 21%. Even if you want to buy a call option here, you could do that. Typically, you could even buy delta 70 call option, or if you want to buy a spread, you could buy stock is at 77. You could buy either 70-80 spread or even 70-90 spread if you are a little more bullish. And if you are very conservative, you could even do, I think you could do 70-80 if you're conservative, or 75-85 if you're a little more bullish. So with that, if you look at DMI chart here, it kind of shows bulls and bears are fighting. The gap between the blue line here and the red line is not too much. It's trying to figure out, should blue line go up or should red line go up. So at this point, it's in a neutral territory. But if you look at the volume average on the balance volume here, that's picking up. That shows you there is a conviction. People are buying the stock. And also check-in money flow indicates the smart money is pouring into the stock. That's always a good sign. I guess people are taking advantage of this downturn in the stock, and given there is a short, short ratio, high short ratio, I think people are really trying to buy this stock and wait for any short squeeze type scenario because earnings is coming around the corner. Stock can really go up. So with that, I recommend buying Daqo Energy. It's a good stock. I already own some, and I'll be adding to my position if it goes down. Next, let's look at Sunrun. It's ticker symbol RUN. These guys are into design, development, installation, sale, and maintenance of residential solar systems. And as you can see here, Sunrun reports a Q1 loss, which that's always the bad news. That's on May 5th. I think there is nothing more about this. And I think somebody here think this stock could surge 50%. That's a motley fool. I think these are some good news here. But I think the main one is Sunrun reports Q1 loss. That can take some chunk out of the stock price. From an earnings per share perspective, I think they are negative right now. They're not making money. And if you look at the sales, I love this sales growth here. This is a good clip here. I like to see sales growth accelerating year over year. And if you look at the shares outstanding, it's not too bad. It's a little high, but not too bad, manageable. And if you look at the fundamentals here, it's a $41 company. Stock sales has appreciated nicely. That's good. Nice gross margin, nice institutional support, great, 91%. The float, short float is high, so this is something to watch out for because this can cause stock to go up on any good news. And as you can see here, they have done not great. 6 month negative, 3 month negative, all the way to 1 day negative. So I think it's this one is to good to buy on this weakness slowly and accumulate. And if you look at the margin itself is negative, as you can see here. They're not making money. Earnings per share is also negative. They got a lot of shares available, as you can see here. That's a little bit red flag. Shares available is increasing, but I think it's manageable at this point. As you can see here, company has got a lot of debt. They got 520 million cash, but so much debt here. That's something to look at. But this industry looks like companies do carry a lot of debt. And as you look at the volume average, that's good. Very liquid stock, nice 2 year return. So 1 year return is 211, 2 year return is 171, 5 year return is impressive. So this company is again not a fluke, one hit wonder. They've been doing nicely in 1 to 5 year period. And ROA and ROE both are negative. This is something I don't like too much. I like to see positive double-digit ROE and ROA, something like what we are seeing in the Daqo Energy, something we have to watch out closely. And earnings, I think it's today. That's where a company lost some last year Q1 loss. So with that, let's look at the chart of this company. As you can see here, company had done nicely, but since February timeframe, looks like all the solar stocks kind of showed some negative performance from February March timeframe. Kind of stock slowly slid down, and now there is an earnings miss, as you can see here. Because the earnings miss, stock came down $1.56 today. So I think this could be a good opportunity to buy. And as you can see here, today IV is a little high, 48.5. Typically, in a day or two after the earnings, this IV will crash down. We call it IV crush. So you could buy a call option if you want to in a day or two as this IV percentile comes down a little bit, and hold it for a while. So you could even buy a call itself, say 70 delta or higher, or if you want to play the options game, you could buy maybe option at say 35 45 spread. That will also work with this. And as you can see, our RSI is low. That's good. Stock is oversold. It's good to buy when stock is oversold. And as you look at the DMI chart, nothing surprise here. Stock falls, red line goes up, blue line goes down. Typical bearish scenario. I think we need to pretty much ignore the DMI chart when stock comes down like this. From a volume average perspective, it's showing some downtrend here, which is also natural. As stock falls down, volume average typically comes down. I think as a contrarian, we can slowly add to our positions because it's a stock has gone down. But in the past, when the stock has gone down like this, typically they try to come back. So I think this will also it will come back. Generally, the solar market itself is kind of down, and this company had a negative earnings announcement. That's why it came down. So I would buy this company on this weakness slowly and accumulate. Next is Enphase Energy, one of my favorites here. This company also manufactures, develops, home energy solutions for the solar photovoltaic industry. It's a great stock, and as you can see here, this company has got a good competitor in SolarEdge. That's also a great stock. So with that, if you look at the news here, three solar stocks gain on solid installations, solid first quarter performance, and I think overall it's a good story. Only thing is their guidance was a little bit low. That's why stock kind of came down after the earnings, even though earnings itself was good. From a earnings per share perspective, I like this. I wanted this to go up a little bit, but that's okay. They're making money. And from a sales perspective, nice sales growth. I like this sales growth. I like this. And shares outstanding is growing, but not in a big way. That's again a okay sign. And from a fundamental perspective, I like the sales growth here. Nice sales growth, nice gross margin, and institutional ownership. And PS ratio, price to sales ratio is 21, not too high. That's okay, manageable. And the stock is, I think it's done nicely for 1 year, off 44% from 52-week high. But I think this one also you can slowly start buying because the stock has fallen down. Nice sales growth, fundamentally strong company. I think this is a good time to accumulate this stock also. And from a margin perspective, company is making money. One caution here, PE ratio is a little bit high. These type of companies, we should not measure them by PE ratio. Instead, we should look at price to sales ratio, which is manageable. And they got good amount of cash and debt, which is lower. I think this profile is a little bit better because cash is more than debt, unlike the previous company that we saw. And ROE is double digit, ROA is positive, that's better. And they're reporting, they just reported, though it'll report next in August. So with that, I think this is a good company. I would buy this company to this weakness and hold it for a long time. If you look at their chart here, a nice looking chart as you can see here. Since March or so, company has been doing a little bit, trending down, which is same story with all the solar stocks that we saw so far. And with the earnings and the negative guidance, company stock came down here. I feel it's a good buying opportunity. And this one, as you can see, our IV percentile is 6%. Typically, after a couple of days after the earnings, this will fall off. Typically, that's because of IV crush. So even if you want to buy a call option at this time, you could buy Delta 70 call option, or you could even buy 120, 130 spread. That's also good. Make sure you buy it 3 months out so that way you have some time on your side. And as you can DMI chart, as you can see here, we can pretty much ignore this because stock is falling. DMI shows bearish sign with the red line above blue line, and volume average, same story. Right now it shows negative trend, which is very typical in this type of stock coming down. And check-in money flow indicates money flowing out and a little bit stabilizing now, and this can turn up pretty soon. As you can see here, uh, quarterly earnings, check-in money flow came down when the stock crashed, then it turned back around. So this is a good time to buy now. I'm sure this will turn back and start going up, in a couple days. Next one is Sunnova, ticker symbol Nova. This is into residential solar energy storage. I think this right now earnings per share is negative, as you can see here. Company is really investing into its own product. I like this sales clip, as you can see, a nice sales clip. The sales growth is nice, and shares outstanding is manageable, not too bad. And from a news perspective, I think when this will be profitable, because all you can see negative earnings per share. I think this is one stock Motley Fool is thinking it will go up, and these guys missed the revenue estimate on April 22nd. One reason stock is down, I would think. And with that, if you look at the fundamentals here, stock is doing great. They got nice sales growth here. I like to see that. And short float is okay, not too bad. I think price to sales is also not bad, and stock has done nicely for 1 year. But since 3 month, 1 month, all negative, I think it's good to buy this and accumulate on into this weakness. And from a margin perspective, as you can see, company not making money, negative earnings per share, negative margins. I think they got some cash, 151 million. So much debt load, as you can see here. They took so much debt. And I think they got ROE and ROA a little bit lower. From a profile perspective, this is a little bit weaker of the companies because they got so much debt. ROE and ROA are negative. I think from a quality perspective, I would like Daqo Energy and Enphase better, because their debt profile is a little bit lower. So earnings is on 8/4 because they just announced. It will take some more time. I think this one is okay to buy into this weakness slowly. I want to see this debt situation improving as you go forward. If you look at the chart perspective, nice looking chart, just like any other solar stocks that we saw, somewhere around March, mid-February stock is kind of coming down, as you can see here. I think stock should recover as you go forward. IV is a little bit higher at this point. I would not buy call options because IV is high. If you want to sell some put options, put spread, you could do that. Or if you want to be a little bit brave and sell some strangle, or even sell some iron fly, you could do those things because IV is high. You could bring in some premium. But if you're selling some premium, make sure you don't go too much into future. Do some 45 days to expiration or something along those lines. And nothing to talk about when it comes to DMI. It's bearish. Money is flowing out of the stock slowly, and check-in money flow is indicating there is some positive, smart money is flowing into this stock, and that's a good sign. So with that, I would buy Nova into this weakness slowly and accumulate. So with that, thank you very much. Happy trading.